Hello friends, welcome to the update on Mirae Asset Aggressive Hybrid Fund. In the next few minutes, we will discuss the fund strategy, but before that, let us give you a quick summary on what has happened in the market recently. We are at the fag end of the Q2 FY26 earnings season, and till now the earnings have been marginally better than expected, largely driven by strong numbers in metals and OMCs, while BFSI has also delivered a better than expected margin and asset quality performance. Consumption, as expected, has remained weak. However, with the recent GST cut and the liquidity measures by the RBI, commentary from most managements remain optimistic. FII selling took a breather in October, while net buy of USD 1.2 billion, while flows from the domestic funds remain strong on positive government actions and expectation of a US-India trade deal. However, the same is yet to reach a conclusion. Amidst better corporate earnings, pause in FII selling, we saw major benchmarks delivering 4 to 5% in October, while returning 6% over a one-year period. Coming to hybrid funds, research suggests that asset allocation is more important than timing the markets. Hybrid fund gives us the diversification across asset classes, and allocation between the assets is based for us on an internal framework which is both based on fundamentals as well as relative valuations. Rebalancing is autopilot across the cycles, and investors don't have to bother about timing the market. Net, it gives us diversification across the asset classes, participation in the equity market, and debt allocation gives us downside protection over volatile markets. Mirae Asset Aggressive Hybrid Fund returns are determined by two factors. First is the asset allocation. Second is what we buy in the equity portfolio. As the name suggests, the equity allocation is higher in this fund, and if you go back in history, we have maintained an equity percentage anywhere between 65 to 75% in this fund. Taxation is equity taxation, and equity portion is more like flexi-cap fund. That is, we have freedom to allocate stocks across market capitalization. However, given the investor profile, we have a large cap bias in the portfolio. The equity portfolio is built on bottom-up basis, while we keep cognizance of the benchmark. Our style is to buy quality companies up to a reasonable price. Portfolio movements. If you see the last couple of months, we have reduced equity percentage considering the market movements, which is more upwards, and currently we are at around 75%, so around 2% reduction. Key overweight continues to remain financials, auto, telecom, pharma, while key underweight are FMCG, capital goods and oil and gas. We have decent weight on consumption as a theme, which is X of FMCG, which includes building materials, consumer durables and retail. In terms of what has worked for us over the last 1 year has been the overweight calls on financials, pharma, metals and autos, while the overweight call on cement, consumer durables have impacted the performance. On key changes, we have reduced weights in financials, capital goods and telecom, and on addition, we have added few consumer-oriented businesses. So that was it from me for the Aggressive Hybrid Fund.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.